All right, guys. So, as we have said, the desperation is reaching epic levels. The AI bubble cannot afford to pop, not now and not ever. But herein lies the problem. There's just not enough money to go around. Now, Morgan Stanley predicts global spending on data centers will reach $3 trillion. Now, half of which will be coming from bond issuance and borrowing. The other half will come from revenue from all these hyperscalers. At the center of this mess is the world's most valuable company. Nvidia is sitting in the middle of this circular financing, musical chairs insanity. Nvidia is more than just designing and selling chips. Because they have so much cash, they are able to provide venture capital. They are also investing into companies like Intel, OpenAI, and CoreWeave. It's this AI investments that get recycled back into Nvidia. The companies buy more chips from Jensen Huang. That's why everything hinges on Nvidia developing better chips and the company value continuously growing. But Western markets are limited. Even if the US and the entire G7, they all start building data centers, there will be a ceiling to how many chips can be purchased. AI chips and data centers also have a lifespan of 2 to 5 years at the most. So there will be recurring revenue, but it's not yearly and definitely not monthly. And that's why the US just did the unthinkable. Nvidia's growth, the good old days of 2025, just won't come back. Last year, we saw incredible growth of 100 to 300% a quarter. That was when the chip war really started and the big scramble began. Furthermore, Nvidia's competitors won't be standing still. Intel and AMD will be coming up with their own chips as well. So the company has no choice but to enter the Chinese market. The entire AI race and chip war entails on keeping Nvidia afloat. Western markets are limited, and China's industrial base is what Jensen really needs. Now, the goal of AI is to enhance work and manufacturing is forever. Whether it's making a phone, an EV, or building a plane, all the processes can be optimized, and that requires AI, which is powered by chips. Now, China represents a massive $50 billion market for NVIDIA's AI chips, and this is projected to grow by 50% annually. This is an incredible rate of progress that compounds over time. That means in 4 years, China's market just for AI will hit $250 billion. That's a quarter trillion down the road. It's a big reason why China is trying to ring fence their own domestic market. It's also why Trump is scrambling to sell U.S. chips to Beijing. Here's how the desperation has gotten, how bad he has evolved. Trump is literally begging China to buy AI accelerators from Nvidia. However, the terms of the deal is weird, and it's another shakedown on U.S. tech companies. So here's the chain of events. Trump approved sales of Nvidia's H200 chip to China. He then called President Xi and said that advanced AI chips are now for sale, like a sales representative. Of course, the Blackwell chips at the next generation Rubin line, they're not on the list. China themselves did not make any commitments to buy as well. Here's the really bizarre twist. 25% of the Chinese revenue from Nvidia will be paid directly to the U.S. government. In other words, it's a tax on U.S. chip companies to fund the federal deficit. There are so many wrong incentives here for both sides. Now, firstly, taxing tech companies on a revenue level is crazy. Nvidia obviously innovates better than the U.S. government, and the money is better left with the company to deploy. Secondly, now China has a lot of flexibility to accelerate their AI development while also developing their own chips. Now that the H200 is fine for China to import in, we can expect quite a few Chinese AI companies to begin buying them. Now, short-term wise, it's a win for Chinese AI. The previous H20 chip approved for Chinese sales had a total processing power performance of 2,000 at best. The current H200 is at 16,000. That's 8 times more performance. Now, of course, it's not as powerful as the Blackwell series, but it's a big jump from the much weaker H20 variant. Chinese chips are still behind. The current Huawei Ascend line is some of China's most advanced domestic chips. Chinese companies are stringing a bunch of them into clusters to mimic the performance of US accelerators. Now, China has a lot of money, especially the tech companies. We can expect them to stockpile as much as possible. They'll probably string the H200s together and maximize every drop of computing power. Essentially, the US AI bubble at Trump's gamble is going to give China a serious advantage going forward. Coupled with Chinese software workarounds, we can expect even more DeepSeek shocks coming down the pipeline. Now, currently, China only has 2% of global AI compute power, while the US controls 73%. But with H200 exports, China can close the gap and ramp up their compute power. They have more AI jewels on hand. Conservative exports allow China to hit 12% of global compute power. And if Nvidia gets desperate and exports even more, this number can hit 30%. The gamble Trump and Jensen are taking is rather risky. Will Nvidia make money? They probably will. Billions will flow in, but there are serious drawbacks. Chinese AI solutions will start to fly past the US. Now, you combine that with their open source nature, it could be a disaster for even ChatGPT. Now, global developers will be relying on a Chinese AI stack to build their solutions. Another issue is how the central government will throttle the exports as well. Beijing is set to limit access to the H200 chips. China knows the game. Jensen wants Chinese companies to get hooked on Nvidia's chip architecture, and that will make breaking away even harder. But China wants to champion their own chips as well. There's Huawei, Capricorn, and the latest Chinese IPO more threats. Now, after that particular IPO, their stock price jumped more than 400%, which tells us everything that we need to know. China's push for domestic AI chips is serious, and they won't halt things just to get Nvidia's chips. So the challenge for China is to find that delicate balance. How do we use American chips without severely slowing down our own progress? And the best way to do it is through limiting access. And I suspect China could start giving subsidies to companies buying domestic chips. There are some risks for the Chinese as well, they need to factor in. Now, NVIDIA's Blackwell chip still gives us AI clear advantages, but just barely. The Blackwell clusters can train AI language models more efficiently. In fact, it can be 50% more efficient than a H200 chips approved for sale to China. However, China has cheap and abundant energy. Their cost of powering their data centers is anywhere from 30 to 50% cheaper than the US. And this allows them to save on the operating cost and pushes their efficiency up as well. Now, let's get this clear. If the US didn't overextend themselves, they wouldn't willingly sell China the chips. Beijing will most definitely craft countermeasures to maximize the H200 benefits while minimizing risk to their progress. But let's pivot to US farming because that sector is also facing extreme pressure. And by now we know the crisis facing US farmers. They're competing with low-cost producers globally. Countries like Argentina and Brazil, they have an overall lower cost of production versus US farmers. The numbers we have here are before the trade war, which just made things far worse. Now, in 2023, Brazil's cost of soy production was $476 per acre, while the US was nearly $530. That's a 12% difference. It's very big when it comes to commodity prices. The US might have cheaper fertilizers and cheaper financing costs, but a big difference comes from the land itself. Brazil has more arable land that gives their farmers more growing season opportunities. You grow more and you sell more. And since 2020, the Brazilian real has been massively down against the dollar. So their export earnings allow them to earn more in their local currency as well. Now, use that crazy tariffs on farm equipment. You realize how dire the situation really is. But instead of solving the long-term structural problem, Trump has decided to throw money on the situation. I'm delighted to announce this afternoon that the United States will be taking a small portion of the hundreds of billions of dollars we receive in tariffs. And we're going to be giving and providing it to the farmers in economic assistance. And we love our farmers and use that money to provide $12 billion in economic assistance to American farmers. $12 billion is a lot of money, Mel. What do you think? This relief will provide much needed certainty to farmers as they get this year's harvest to market and look ahead to next year's crops, and it'll help them continue their efforts to lower food prices for American families. So the administration is moving to provide a bailout to farmers. It's a $12 billion payout, but it's more of a Band-Aid than anything else. U.S. farmers themselves know it's just kicking the can down the road. Trump is trying to get John Deere to sell cheaper equipment, but even that isn't enough as well. The problem isn't just rising costs, it's falling income as well. Take soybeans, for example. In 2022, income was over $61 billion. Year after year, the fall cap happening. This year, U.S. farms are only bringing in $43.5 billion. Income is collapsing. Earning less is bad, but when everything else gets more expensive, then you're in real trouble. Cost of machinery is up. The cost for seeds is also up. The cost of labor has also increased. Now, what's worse is the interest expense farmers are facing. Since 2020, interest costs have risen by over 70%. That's the biggest increase of all the ticket items. Now, you understand why U.S. rates have to come down. Just like manufacturing, if cost in the U.S. keeps escalating, it makes exporting globally a real problem. Other regions like Asia and South America can easily make up any shortfall at a cheaper rate. Now, this chart is supremely important. Despite falling inflation, farm expenditures are still going up. It's a mixture of high interest rates and more expensive inputs. Even if Trump decides to drop rates down to zero, Palm's borrowing money will still face some prejudice. The U.S. economy today is getting bifurcated into AI and tech versus everything else. Investors, they want a return for their money. And the quickest way to do it is to ride on a clear tailwind, and that tailwind's AI. The U.S. farming industry is facing very clear headwinds. Because of that, farming loans will have a premium stack on top of it. Trying to get government money also isn't easy. The process is long with a ton of hurdles to jump over. And guess who the U.S. needs to rescue their farms? You guessed it. Besson is backing everything on China to save U.S. farming. The real crisis here is the demand side of the equation. Without China, who is the biggest importer of food in the world, U.S. agriculture is in real trouble, and Besson is trying to defend the deal. Since the agreement with the Chinese, they are going to buy 12.5 million metric tons. But Margaret, I'm involved in the agriculture industry. I run a soybean farm, and I can tell you one, you invest in it. Sorry, you own or invest. People in my family go out and work on it. I actually just divested it this week as part of my ethics agreement. So I'm out of that business, but I probably know more about any Treasury Secretary than about agriculture since the 1800s. And I can tell you that what farmers need is certainty. And we have put that in place with this trade deal. But will China really buy 25 million tons annually? Not just next year, but in 2027 and in 2028 as well. It's highly unlikely because they are still buying huge volumes from Brazil. They are also increasing domestic supply and supply from Russia. For the Chinese, this is a lever they could always pull should the U.S. reverse on their commitments. Rare earth supply and buying U.S. soybeans is the easiest cards they can play. Meanwhile, U.S. farms are running out of time. U.S. farm bankruptcies are starting to rise in Q1 and Q2. Collectively, over 180 farms went under. After the numerous bankruptcies in the past, even more are getting hollowed out today. Trump's $12 billion bailout is useless to them. These farmers might never, ever come back. Laughably, it's less than the $20 billion bailout given to Argentina. And if Trump really wants to save U.S. farmers, he has to give tariff exemptions to them. And he will probably have to revive the national food stockpile like China. The US will need to start buying up supply from their own farmers. Yes, it will be inflationary, but there probably isn't any other way out now. Just relying on Chinese orders isn't a game plan. Trump will have to find other ways to increase demand while bringing costs down dramatically. The $12 billion is simply not enough. But let me know what you think. Will China really buy the H200 Nvidia chips? And will the farm bailout even work? Let me know in the comments below. Stay safe